Hey everyone, how's it going? This is Gersher from Technical Option Traders Inc. Hope you guys are having a great day. So let's get started here on how we're going to close out this week. So this is a weekly chart on the S&P 500. So there's something interesting that's happening here, and I've been talking about this in my previous videos as well. So this pullback right here, we had increasing volume right here on this move down. So you guys can see when it's a move down like this with increasing volume, that means that there's more money behind this, and that could be smart money behind this move down. That's what we want to see. Now, the other interesting thing is we have 1, 2, 3, 4, 5, 6, 7 weeks of straight down moves in the S&P 500, which has not been repeated since 2008 financial crisis. So that's something that we want to keep in mind of, right? So now, also, if you guys know me and you guys have been following my channel for quite some time, I am a big believer when moves get very vertical to the downside, there has to be some sort of relief and there has to be some sort of pullback. It can't just keep going in one direction because the market rarely shows its hand. Unfortunately, we did have a relief in the previous week, but on the weekly chart right here, we have not had a really green uptake in the last 7 weeks. So we should start to see a relief rally sometime soon. If we don't have that, the levels to watch their downside is 375, 368. If 368 breaks, we're going straight to 350 here, okay? So that's something we want to keep an eye on how fast or how long this rally to the downside lasts, right? So if this is a bearish rally and it's going to keep going, it's going to get very, very aggressive, right? Now looking at this on a daily, right? So yesterday, if you guys watched my video, this is what I was talking about. If the market is going to move up, we're going to need to see above 404, 410 is a big level that I'm watching here, about 404 to 410. But the biggest level, or the level that you guys should be eyeing, is 430, okay? Until we get about 430, there's no possible chance that we have on the upside here. So like look in this downtrend line right here on the daily time frame, it is just getting very, very steep and very, very aggressive to the downside. So there is nothing happening that's gonna that's bullish right now. There's no case right now for a bullish market. And the biggest thing I look for is sectors. All market sectors are red today. Right, even the defensive sectors are all red today. So that's something that we want to keep in mind. But however, this is getting a very aggressive move to the downside. We do need some sort of a pullback here. If we don't get a pullback very soon, it's going to sell off quite aggressively. Starting from June 1st to June 15th is another date you guys want to keep in mind. June 1st is we're going to talk about balance sheet reduction by the Fed, and June 15th is the FMOC meeting. So we'll see what happens here. But right now on the weekly and the daily time frame, the S&P 500 looks very, very weak. And if we look at how much the market is down, right, from all-time highs, the S&P 500 right now is around 20%. It hit almost 21% here, okay? So the market overall is very, very weak, 20% decline in the S&P 500. A lot of people will say that this is just a correction, a healthy correction, which is perfectly fine, right? But we do need to see which direction it's going to go and which sectors are going to push up with it, right? But the overall right now, the whole market right now is very, very weak, right? So let's switch over to the triple Qs here. The triple Qs, the first thing we want to look at, this is what I want to talk about right now, is they are at 31%. They touched 31% down move from all-time highs, okay? So that's a huge correction. Even the 2020 crash for the triple Qs was only down about, I believe it was 20%. Let's see here. Well, 31%. So yeah, so we got the same move here, okay? So we got the same move in the Qs right now, okay? But then you guys see here, Qs, they consolidated in the 2020 crash when that happened, and then they finally started to push up. So we'll see if that happens here. If not, the Qs are overexposed, and they are in this category right now. So they're below the 285 level here, and as long as the 300 level holds, we're gonna make our way down to about 259, 260, right? That's what the Qs are looking for now. On the weekly time frame, the Qs are looking even more aggressive on the sell side. This is just a crazy move down. And like I said, we should get some sort of pullback or a relief rally or some sort of, a relief in this downtake, right? This is too aggressive to the downside, but also at the same time, if you think about and compare to the charts to the 2008, it was very slow move. It took a few months for the '08 crash to actually pan out. So that's something that you guys want to keep your eyes on, right? So overall, the Qs are very, very bearish right now. Looking at the hourly time frame, this is what I use for intraday. On the Qs here, I need to see price action get above 305, and with volume picking up, and then I could take a trade maybe up to 325. But right now with this down move in control, we're making new lows, right? So market is continuously making new lows. It's not making highs anymore. It's making new lows. So there's no reason to expect up move, but we can get a relief rally from this down move where shorts are covering. People are taking profits from their down moves that they made. That's something we do want to watch out for, which can cause a temporary relief rally. Okay, but overall the Qs are still bearish. If we look at the daily chart, the big level that I have here is around here, the 350 level. That's something that you want to keep your eyes on until we get above that. This could go sideways here, or it could continue to crash. But if 260 goes, we're going to go down to 250, then back to 2020 highs at 237. So these are big levels that are setting up here for the Qs overall. Dow Jones, like I said, if you guys were watching my previous videos as well, we have a breakdown, we have a pullback, and then the red day green candle right here to try to see if we can get a bounce. But today's red, so the Dow Jones have touched this level, which has not been tested since December of 2020. Now we get a bounce from here. We want to see how big this move down can go, right? So we want to see some sort of bounce, but it looks like a breakdown. Retest fail here, and now we're back to the support test. So this support has been tested twice already. If we get another test of the support on the Dow Jones, we're going to break down to about 295 here. So looking at the weekly time frame, as you guys can see, selling is aggressive here, right? Sell candles picked up, even though this week is lower than the other week. So this is why, even with the other indexes, I'm expecting some sort of bounce to come through where we can get some sort of relief rally. But if we don't get that right on the Dow Jones, look for a break of 306. We can run down to 295, then about 286. Yeah, this is a huge gap that can be filled on a Dow if you guys keep your eyes on it, and it looks like it's going to continue to break. So the only way I trade upside on the Dow Jones, if price gets above 328, then I'll maybe take a trade to the upside around 340. But right now on the Dow Jones, there's nothing positive that can tell me that I want to take this to the upside here. Right, looking at the IWM, let's look at the weekly time frame first here. Same thing, just consecutive downtick here. This is a bear flag that we'll go over in a little bit. This is an aggressive sell move with aggressive selling pressure, right? So there's selling pressure is very aggressive on IWM. It's a test. There's a gap right here that can be filled here. So IWM is already testing COVID highs. Okay, so this is pre-COVID highs. Okay, so this is something that we want to keep an eye on. If this gap fill does happen, it can make IWM go down much faster and much lower here. So on the daily time frame, this is a bear flag that's being printed here. We do need to close below 170 to get to the 165, but this down move is very aggressive, very volatile. We'll see if we can get a bounce up to retest that 180 level. If that 180 fails again, we'll definitely break. If it fails and breaks down and tests 170, definitely see the 165 coming very quickly for IWM. And next up we have here is gold. Okay, gold is consolidating above this downtrend line. However, I'm not bullish gold above 175. It needs to get above the 175 zone, right? Overall, it's in a big consolidation. Let's look at the weekly time frame on gold. It is trying to bounce here on the week. This is a huge base that it made. This is a cup and handle formation on the monthly time frame as well, which is holding up really well on this trend line. We'll see what happens to gold in the next few weeks here and the next few months. But overall, gold, if it gets above 175, I'll get bullish again. But I would like to see this kind of buying pressure behind it. Right now, the pressure on gold is low. The liquidity is low as well in the market. Even defensive sectors are not safe right now. So that's something that you guys want to be watching for and making sure that you're protecting everything that you do have, right? So looking at the VIX, right? So VIX right now is in consolidation. So VIX, the market is reacting very aggressively, and the VIX itself has not crossed above, you could say 41, right? Even VXX, sorry, and VIX has not crossed above, 32 right here. So it needs to get above 32, and then we can possibly see chances of a market bottom forming. But right now, VIX is consolidating in a range, not really breaking out, not really breaking down, while the market is already like SPY's down about 20%. Triple Qs are down about 30%. So that's something interesting to watch here. Could this be telling that we're going to be ready for a rally to the upside soon? Possibly, but I don't think so. But this trend line is still holding. We'll keep an eye on it. If levels do hit, we can trade it to the upside, right? So looking at ARK consolidating here, not breaking out, not really breaking down here. So ARC is consolidating. This is something you guys want to keep your eyes on. If it does break the 40 level, we'll test 35. But on the upside, we need a break of 49, a push to 52, then maybe 60 here, right? Otherwise, we will consolidate in this zone for quite some time, okay? So looking at KWEB as well. So it's China. It's in this range right here, right? So not a lot to do on KWEB. These stocks are trading in this range. Either we're going to break the symmetrical pattern to the downside, get below 23, get to 20, or we're going to break the upside here at 29 and get to 33, right? So that's something that we want to be watching for on KWEB. But right now, there's not a lot to do. Even on the weekly time frame, it's getting very, very tight as it's consolidating. But the action is to the downside. But we have consecutive buying pressure. However, strong buying pressure, but the candlestick is very weak and the price action is weak. That's not something you want to see. You want to see buying pressure with strong price reaction, not weak price reaction, okay? So the reaction here is very, very, very weak here. Overall, what's up for this week right now, or what's up for the day, is healthcare. But as you guys can see, healthcare sector is in a consolidation. The next LE, energy consolidating at the top. So energy could still potentially continue to break out as long as this trend line holds. Okay, so as long as we break above 84 now, we need to make a new move higher here. Okay, so XLC, which is communication, breaking down. Commodities, once again, commodities are consolidating, but however, there is an interesting pattern that's forming on commodities. Okay, so we need to watch out for this. If this breaks, we'll see what happens, right? But this is something that I want to watch out for with the commodities. If commodities do end up imploding, it could be a really, really big move. Right now, where the commodities are trading, if we just look at the monthly chart here, commodities are trading at levels that have not been seen since 2010, okay? So this is something that we want to keep an eye on, but look at the monthly pressure. Huge volume. Look at the weekly pressure, right? So we have huge volume, more buying pressure here. It's slowing down a little bit. We want to see which way momentum takes the commodities, right? So looking at retail is absolutely killed. Okay, XLY, which is consumer discretionary. Once again, look at the aggressive move with aggressive pressure to the sell side. This is when these two combine, the move down is more solid, right? So this is huge. It's a huge move down, right? So looking at jets as well, airlines not doing so well here for airlines. The pressure's not that aggressive, but it's still there. Semiconductors, we have huge participation, head and shoulder pattern breakdown here. Once again, if it gets below 214, semiconductors will continue to fall and break down, right? And this is due to the fact that supply chain has been a big issue for semiconductors and the overall market as well. So overall market is very weak. Trade safely, guys, okay? See you guys next week, and I hope you guys made some profits this week as well.